Welcome to the Top M&A Entrepreneurs. Today, my guest is Andrew Gazdecki, who to his friends goes by the name Gaz. Welcome. Andrew is the CEO. He launched MicroAcquire, as you can see in the background. Welcome to the show, Andrew.
John, thanks so much for having me. It's
Yeah,
been a long time
you.
coming. I'm excited.
Yeah, you've got a pretty great launch going, MicroAcquire, and I just wanted to talk to you about the business, why you started it, where the idea come from, and was there you just noticed a big need out there, or were you just testing the market?
Yeah, good question. I'll give you two stories and just one is more of a thought, not a story. But so prior to MicroAcquire, I bootstrapped a company called Business Apps. It was a drag and drop mobile app builder. We grew to about a little over 10 million in revenue and then sold it to a private equity firm. And the first thing that happened when I sold the company was I had probably like 10 friends like saying like, can I get an intro to the private equity firm? Like, what's due diligence? How did you find the buyer? And that was probably the first click of like, oh, like, okay, you're all running startups. I assume your goal one day is to get it acquired, and you don't know the basics of how to find a buyer, how to, what is due diligence, what are the legal steps you should take, aside from hiring an investment bank, essentially. And so I thought that was fascinating. And then the second point was as I looked through the market in terms of, you know, putting myself in the buyer's shoes, looking to buy a SaaS company, I looked at, brokerage websites, I looked at other marketplaces in the industry, and nothing really felt like it really favored the seller, so to speak. It all felt like it was favoring the buyer. And so I felt there was a void in the market that, really empowered founders when they're going up against, say, like a multi-billion-dollar private equity firm like I did. We can empower them and help them maximize their exit. So, um, and then the second or the third thing, I'm like totally just getting up my numbers wrong here. But the third thing was for my next startup, in between Business Apps and MicroAcquire, I also started a company called Allcoin, which was acquired by a strategic buyer. Because once you go through the process, you kind of learn how to position a business for sale. Um, and I always wanted to have a company that helped, founders, entrepreneurs, startups. I'm a startup geek. I could meet LeBron James and be like, cool, man. But if I meet like the founder of like a cool startup, I'm like, oh my gosh, you built that. That's so cool. Um, so yeah, I guess, a part of it was also, um, this is kind of a thesis I always run with basically all the businesses I've ever started. But I'm a big believer in trying to spot trends before they're obvious to everybody. So with Business Apps, as an example, it was in 2009. Android hadn't even come out. BlackBerry had apps at the time, if you remember that. So we just built an iPhone app builder, and then we eventually expanded to Android, blah, blah. But I was in college at the time. And so I had unique insights into, I think every business is going to need a mobile app. And so I built that business. So my point is I always try, the way I try to phrase it is I try to look for trends that are going to become obvious to everyone over time, but are not obvious today. So they're obvious to me. So when I launched MicroAcquire in 2020 of January, entrepreneurship through acquisition wasn't really as talked about as much. I felt it could be in an emerging sort of category that could be created, but no one was really leading the charge in terms of like standardizing things, making tooling for acquisitions easier, empowering founders, just bringing the whole market together essentially. So I made the quote, if I ever get a quote, I hope it's this one. Make an obvious bet to you today that will become obvious to others over time. And that's how you can build some really, really interesting businesses. And that's what I did. I didn't even think it was going to work. It was like, list your business on a marketplace and buyers will come and will help sell businesses for millions of dollars without investment bankers. And um, intermediaries. So the idea at the time, and it being private, and um, you know, asking for data sources to better verify revenue, basically everything I wanted when I was thinking about selling my first business is what I built into MicroAcquire. And to me, that was super obvious because I was a customer essentially.
Yeah.
But then to my surprise, a lot of people, were interested in acquiring these digital assets, so to speak, or, SaaS companies, e-commerce companies. And now it feels like everybody's doing it and talking about it. And maybe you have a different vantage point because you've been, in this market for a while too.
Yeah. What was the, I don't think you're really competing against Biz Buy Sell because they just do, the seller puts something up, they pay $50, they put their ad up there. What about Flippa? What was it different than saying Flippa? Flippa's been around for a long time.
Yeah, so I look a lot at Flippa and just read the reviews in terms of, trust and security I thought was an issue, lack of customer support. It kind of felt like a marketplace where everything go. It had kind of like a Craigslist feel for me. I think they're a great business, but it was just too broad. And so when you have a business that's too broad, especially as a marketplace, there's a saying when you try to be everything to everybody, you end up being nothing to anybody. I think I got that quote wrong, but so I felt there needed to be something more specific to startups, specifically SaaS, with higher caliber buyers like private equity groups, family offices, venture-backed companies, real serious buyers. And I felt that was lacking. And when you list on another marketplace, instead of getting a message from, John 22491 with no image or background or any information about you, every buyer on MicroAcquire is ID verified. They have a bio, a picture, their LinkedIn profile is attached. So we put trust and security at the core of the entire marketplace because so many scams can happen when you're selling your business, and that's really an entrepreneur's worst nightmare. So that was, and then another part was just the privacy. When you list on some other marketplaces, it's public. You can choose to be private, but on MicroAcquire, it's completely private. And the reason for that was just a personal experience I had when I told my, 100-person team at Business Apps who were being acquired. You get questions ranging from, I remember it like it was yesterday. Like I had people were like, am I a millionaire now or a billionaire? And then someone else comes in, am I getting fired? Like, and it's everything in between. So I knew it had to be private. And as I was, before I sold the business, I did a lot of due diligence on the buyer. So long story short, I felt, there was room in the market for, something specific to profitable tech startups, with more trust and security and more privacy for the founders and putting the founders first. So that's essentially how I positioned MicroAcquire. So when everyone was going right, we were essentially going left, if that makes sense.
Yeah. No, I think anybody's in the acquisition games, they visit both sites, but see, Flippa is actually kind of changed to your direction because they verify the buyer now much more than they used to.
Yeah, I've noticed their product roadmap is oddly similar to ours.
Yeah, very interesting. Yeah. So you charge the buyer. Yeah, I've had a subscription. I don't think I have one. I had a 12-month subscription. But you charge the buyer, what is it, $299?
We raised it to 390 a year. And then, so I'll explain the business model really quick. So instead of charging the seller a commission, there's no commissions to sell your business on MicroAcquire. Over time, we're going to layer on commissions, but to get the flywheel going, we've been zero commissions for about 2 years now, and we've helped. We've definitely facilitated over $500 million in transactions, but exact number I don't know off the top of my head. But yeah, we charge the buyer, and when you subscribe as a buyer, we will kind of look at your profile. Sometimes we'll ask you to add your LinkedIn, verify your ID. But yeah, we just charge the buyer. And then from there, what you can do is you go and you request access to startups. So you basically see like a blind profile. So it's kind of got like it's like a blend between a marketplace and what you would get from an investment bank, where we give you kind of a teaser where an example would be a listing on MicroAcquire looks like profitable SaaS company in the email marketing space making, I don't know, 2 million in trailing 12 months revenue, 500,000 in trailing 12 months profit. Here's some more information about the business. And if you want more to know who owns the business, you have questions about growth rates or customer acquisition costs or churn or whatever it may be, you send a request to the seller as a premium buyer after you've subscribed. And then the seller has the ability to approve or deny your request. And essentially what they're doing is giving you access into their data room.
What do you guys do? When I first looked on it a couple years ago, I would see some kind of app there, small amount of revenue, SaaS business, but their multiple was really very high, almost more than the distance between what I valued at and what they valued at. How do you bring that together?
Yeah, that's probably the toughest part of the job. So we have some guardrails in place. Like we won't list any startup with an asking price over 7x TTM revenue, I think is our threshold. There's still some really highly valued startups that are just kind of like a Zillow make me move sort of price, which I don't recommend, nor is it effective. But we have put some guardrails in terms of utilizing the data that we have to kind of give a almost like a data driven, valuation based on what we see. So prices can vary, but we have based on just feedback from our buyers and also our sellers, because as a startup acquisition marketplace, again, we want to help sellers. So, we at first it was kind of the wild, wild west. It was just me running MicroAcquire for probably literally just me for the first year and a half. And that's customer support, that's product, that's marketing, that's janitorial services, everything. But now that I have a team in place, we're able to, kind of curb some of those things. But yeah, so when a startup comes in, we'll give them, an opinion of value, where we think you should price this at. But again, it's kind of like telling someone their child is ugly. So in some cases, we'll let them price, at up to 7 times trailing 12 months revenue if they really think they have an opportunity at a potential strategic acquisition compared to a financial acquisition.
Do they stay? I mean, if they think it's a 50x, and they could literally stay on the platform forever, just fielding these inquiries and go, no, I'll give you 10x, but they keep saying no. Do you say, well,
Yeah.
yeah,
Yeah, we've curbed it a little bit, but surprisingly, it depends on the cohort of the business. Like, so for sub, let's say we're looking at we have 3 different cohorts that we look at. One is sub 100,000 in TTM revenue. The next one is 100,000 to 1 million in TTM revenue. And the next one is 1 million to 10 million in TTM revenue. We've actually seen 50x multiples. We've actually seen, I think the highest multiple we've seen is like something ridiculous, like 100x. But this was on like a, 10K, revenue business. So the multiples, below 100K from the data that we've seen just kind of go out the window, because you're really not buying. It's hard to value a business and based on those financial metrics. And really what you're buying is the product, the code base, and the potential upside. And that's where we've seen some really interesting strategic buys. So we've seen it. It's not common. I don't recommend it.
yeah. No, I want to make a point out because I followed Neil Patel, and Neil Patel just 3-4 years ago bought Uber Suggest and turned that into a big money maker, and recently bought Answer the Public, which was just a website that showed you long tail keywords of something, and it wasn't really building revenue. He just told a story about, it wasn't really making revenue, got a really traffic, and we could do this, this, and this to it. So
yeah. Neil's great. He's actually a small investor in MicroAcquire. Great guy, and I believe he just acquired something else, but I don't think he's announced it. But yeah, I mean, if you have situations like that where you have a huge audience and you buy a product and you basically sell that to your audience, I mean, that could be a very, very good and lucrative strategy for, acquisitions.
so who are these entrepreneurs that decides like I'm going to build this product, it's going to be $1 billion thing, but then it just taps out, it doesn't go as far as it can go.
Um, there's a lot of them out there, but I would say so the majority of buyers, or excuse me, the majority of sellers on MicroAcquire are actually bootstrap startups. So, and that's by design because my first business was bootstrap. So when it came time to sell the business, I just sure I'll sell it. But when you have any sort of investor involvement, the more people involved, the more sort of you got to get, maybe one VC partner's approval, and then or you need to get a VC firm's approval, and then the partner needs to get the other partner's approval. Then you have a second VC firm, and then you have some Yahoo angel investors like, let's use this investment bank I used 10 years ago. They were great. So my point being is we really don't work with a lot of those types of businesses. A lot the main profile of a startup that we work with on MicroAcquire is generally fully bootstrapped, fully owned by the founder, ideally profitable. Some are running a break even because they're pushing for growth. But we don't really bump into too many of the, I raised $10 million and now I'm fire selling my business essentially. I think that'll probably pick up just given some of the craziness we saw in the last 2 years in the venture markets. But that's not the marketplace we want to be. We don't want to become the graveyard marketplace, if you will.
Yeah,
We
yeah,
want.
that's like the cigarette butts of the VCs. No, you don't
Yeah,
want that.
yeah, we have a saying internally where we want to be the marketplace where we help, and I'm putting quotes of small but life-changing acquisitions and really remove that stigma of, selling a company for 200,000, half a million, $1 million is pretty fucking cool. But like in the world of tech, it's not talked about, it's not celebrated. And so that's kind of like what we want to do at MicroAcquire is really, you know, show entrepreneurs, a more practical and realistic path to creating wealth, if that's what their goal is. So that's what we do at MicroAcquire. And I have a few interesting stories if you'd like to hear them along those lines.
Yeah. Who are the buyers that come to it? Do they, as far as, did they say, here's 200,000 cash, or do they negotiate with the seller? Like, hey, so if Neil Patel came to me and I owned Answer the Public and it was listed on MicroAcquire, I'd say, Neil, either give you $200,000 or I'll give you $100,000 and I'll give you, cash flow out of what I'm going to do with it. I'd take the plan B because I know what he could do. What does that negotiation look like? Do you get involved with them or not get involved with them?
Yeah, good question. So we just launched a service called Managed by MicroAcquire. It's basically our brokerage service offering where we basically help startups with over $1 million in revenue get acquired. And that's more of a, we'll create like a SIM, blind profile. We'll map out all of our, we'll basically build a market in terms of, the most ideal financial buyers, strategic buyers. So that's a new service that we just added to appease some of the larger startups because when you get to the, 7-figure numbers and 8-figure numbers, a human element is generally very helpful. But for, most startups and pretty much all the acquisitions that we do, we aren't involved at all. So in terms of the negotiations, it's just between the buyer and the seller. And we typically see mostly all cash deals. We see a lot of seller financing, but we've also seen some crazy structures. We've seen pretty much every structure you could possibly think of, con- including the one that you just mentioned, where I just found a co-founder. That's one of my favorites. Because now you get to keep going. Like, because the big reason that people will list on MicroAcquire is, they're either, working on another project, they've taken the business far enough, or, they feel like this is a good time to see a liquidity event and, kind of reap the rewards of their work, so to speak. So we see the full gamut is the short answer.
Yeah. Now you don't really, I mean, I know they have a price listed, but if you don't get involved in it, you don't really know what say if it's a $50,000 business, you don't know whether it's 25 now or 25 later. It's just whatever it was listed for, right? When they sell.
For some, yes, but when a company gets acquired, what we'll do is we'll reach out with a survey that we'll send swag to them. Just how do we do? What was the sale price? Who was the buyer? But we also have tools on Marketplace where you can build a letter of intent. You can build an asset purchase agreement. So we've built like this step-by-step flow. We call it our guided acquisition process. And so from that, we gather data of like, okay, this is what the LOI price was at. And so that's where we're able to get a lot of our most accurate data in terms of, what buyers are paying, how are valuations fluctuating. And as just MicroAcquire stays alive, that data just grows and grows and grows and grows.
Yeah. So I'm just curious back to that VC question. Now, a lot of VCs, they'll have 20 in their portfolio and 18 of them are kind of dogs, let's say. They're just not going to return money to investors. Have you been contacted by VCs, say, hey, can you handle this? Help sell it?
Yeah, so we have a lot of quasi, like unofficial handshake partnerships with accelerators, VCs, any sort of pocket, any sort of organizations with large pockets of startups, including, law firms, restructuring companies. We've done a big part of our deal flow strategy is partnerships. And so yeah, I mean, all the time you see, and sometimes they're great outcomes. Sometimes it's, hey, we raised, 2 or 3 million, and then those are really good strategic buys for larger companies that may be looking for an acqui-hire, or they have a phenomenal product, but they weren't able to get that next round of funding. And so they end up seeing a great outcome, arguably, or potentially even better if they had raised more funding. So yeah, we do see that quite a bit.
Yeah. Where are you going with this? I mean, is it turned into more than you ever expected in the last, 2 to 3 years? And you could see this growing to, I don't know, 50 million, $100 million company in revenue. What's the opportunity? Or are you a startup guy going, okay, I'm at the end of my road. I want to go back to the startup, the next project.
Yeah, good question. I think, well, to start, investment banking is $100 billion TAM market. So, and I have two theses that kind of drive me with the business. One is, creating a startup has been democratized in the sense of you don't need to be technical. There's just so much content out on go-to-market strategies. So it's never been easier to build a startup, especially to, it's not easy, but it's a lot easier than it was a decade ago in terms of, because we were just guessing, like does this work? And through the last decade, so many entrepreneurs have been successful.
And it required us so much more money to get an app built, 10 years ago.
Oh yeah. And then it looked like crap, and then it had bugs, and just, so there's been a lot of standardization in terms of, these are the things you should do to build a startup. And I think a lot of entrepreneurs are going to forego the venture route and realize, what I really want out of a startup is just to not worry about money. I just want to be financially secure. And the difference, like, you don't need a $1 billion unless you need a private jet or something like that. Like, you're perfectly fine with like a couple $1 million. And that's truly life changing. In terms of, how far this business can go, I think, I'm an optimist, so I'd say sky's the limit. And then in terms of, how far I want to take it, what I really want to do is help millions of entrepreneurs across the whole globe. We've had acquisitions happen on every continent except Antarctica. I don't know how big of a startup scene is up there, but
It's cold. It's a cold scene.
yeah, but we're working on that one.
Frigid.
Yeah, but the main goal is we want to standardize, streamline, and just make acquisitions as easy as possible at MicroAcquire. So, we want to create basically tooling so advanced and just so easy to use that even if the deal isn't found on MicroAcquire, you still bring it into MicroAcquire to facilitate the transaction. So that's kind of the level of what we're thinking is innovating on due diligence products, innovating on legal doc creation, finding the best buyer possible. There's so many different steps in an acquisition, and each one could be an individual company. And so we're attacking each of these problems pretty aggressively. And it's a lot of fun. So I could see myself definitely running this. This is my third startup, probably my 10th, depending on what you classify as a startup. I've been an entrepreneur my whole life. Yeah, I'd say, we'll have to see, but I will say I'm having a blast running it. So
Oh, good. You have seen any stories where somebody's acquired something for, let's say we bought this app, it's running, but the entrepreneurs tapped out and the buyer turned it into a 10 million, $50 million, as an example, company?
yeah, I got two quick stories off the top of my head. One person acquired a company, I can't say their name, but they raised they bought something for, let's call it like 100K, and then ended up raising 5 million or something like that based on that acquisition. So we'll see where that goes. The second one is a company called Median that was acquired for, I believe, about $500,000, and it was sold by an individual named Derek Hammond, who now is working on a new startup called Workshop. And the story there is this individual named Spencer bought the company, and he's been growing it. And it's kind of like Zoom for your website. Like you go on MicroAcquire as an example, and you're like, I don't know how this works, Andrew. And I can log in your computer and, kind of move stuff around and saying like, hey, John, click that. I can just log in. And anyways, great product. And the founder basically was like, hey, this is a great product. We're probably going to shut it down. And ended up selling it, using those funds to help seed their new company, which I believe they just raised 6 million for. So the seller exits the business, has some, capital to put into their new startup. That new startup's doing great. The buyer is now, I believe he's doubled the company already, and he's aiming to build it towards 10 million in revenue. He's been really public in terms of like how he talks about it and stuff like that. But that's one of my favorite stories to share in terms of, progress off the top of my head.
Andrew, I love it, man. I want to thank you. I know this is a one of my shorter, but I love what you're doing here, and I want you to wish you the best of success in the future.
Thanks, John. I really appreciate that.
All right, man. Thanks so much for being on the show. I appreciate it.
Yeah, thanks for having me, John.
Cheers.
Cheers.